Hi, this is Roger Balzer. Welcome to our 2-Minute Tuesday for October 5th of 2021. Our title for this week is Pullback or Worse. Broad indices exhaled on Monday after a bounce last Friday, with most major indices showing sharp declines, extending a theme from last week. Out of the three main domestic equity indices, the Dow Jones Industrial Average fared the best at a loss of 0.94%. Followed by minus 1.3 return on the S&P 500 index and a sharp minus 2.14 return for the NASDAQ composite. The S&P has now fallen 5.2% from its all-time closing high of 4536.95 seen on September 2nd. This is the first 5% pullback for the broad market benchmark since October 28th of 2020. This streak of 341 calendar days without a 5% pullback is the longest such stretch since February 5th of 2018, which extended a streak of 588 calendar days. Monday's decline led the 20-point chart of the S&P to push lower to a chart level of 4280 after giving a second consecutive sell signal during Friday. Last week's movement led S&P to a weekly overbought-oversold reading of oversold at 40%, marking the most oversold weekly reading for the index since October of 2020. The continued push lower Monday led to an intraday weekly overbought-oversold level of 67%, which is the most oversold the index has been since April of 2020. While the S&P has violated a few near-term support levels during this pullback, there are several areas we can look for further support should the declines continue. From the current levels, further support can be found on the 20-point chart at 4240 and 4180 and the 4080 to 4060 range. It's worth noting that a 10% pullback from all-time closing highs would be notched with a close beneath 4083, which is right above the aforementioned support from May of this year. Growth-oriented stocks have been among the hardest hit during this pullback, some of the largest companies showing the steepest declines. This is evident through the amplified losses of the NASDAQ, which saw a return of minus 2.3 Monday to mark a 7.79 decline from its all-time high on September 7th. Monday's movement led the 100-point chart of the NDX to further violate support from July during its descent to the level 14,400. The index sat at a weekly overbought-oversold reading of minus 45% through trading Friday, which is the lowest reading since April of 2020. Based on intraday data Monday, the NDX sits at a weekly bought, oversold, overbought level of minus 81%, which has not been seen since the week ending March 20th of 2020. Further support on the more sensitive 50-point chart can be seen at 14,000, which is just below the 10% drawdown that would come with a potential close beneath 14,108. Turning our attention to one area that you will be seeing and hearing a lot about on TV, crude oil. Crude oil has rallied to over $80 a barrel to reach its highest level in 3 years. The uptick from crude is largely attributed to OPEC's comments on Monday about sustaining its production level, which will gradually increase to 400,000 barrels per day added in November. As a result, the chart for continuous oil will break a double top at 76 and return to a point-and-figure buy signal after exhaling to around $62 a barrel a couple months prior. Further, CL will now carry its highest overbought-oversold percentage reading in almost 3 months, suggesting we could see the commodity take a breather around these levels. Initial support is offered at around 62 on the default chart and 70.5 on the half-point chart. Although OPEC's response to sustain its production schedule was supposedly anticipated, the sharp response from the market suggests that there is still a fair amount of surprise, especially given the continued pressures from the United States and India to raise production. That is from Reuters. With inflation fears remaining top of mind, oil prices could face long-term headwinds. However, with producers remaining cautious about adding additional economic roadblocks, the near-term trend is decidedly upward. That's all for this week. If you have any questions, comments, concerns, please reach out to me and make it a great week.